Good morning, everyone, and thank you for joining us. I'm Brittany Branyan, and I serve as Director of Carey Center Collegiate and Community Programs, to include the Nonprofit Affiliate Program, currently serving over 125 nonprofits in East Alabama and beyond. Welcome to What is an Audit and Do We Need One? And if you're anything like me, you have the heart and vision of a nonprofit leader, but the business side of the organization isn't your favorite. That's completely normal, and that's why I feel this program is especially beneficial. Before we begin, I would like to share a little more about the Nonprofit Affiliate Program for those of you who are unfamiliar. The Carey Center Nonprofit Affiliate Program fosters a community of educators, professionals, organizations, and students who have a desire to embody philanthropy, nonprofit studies, and leadership in their professional and personal lives. We provide professional development and networking opportunities to members to include Mix and Mingles, the Carey Center Volunteer Internship and Career Fair, also known as Meet Me at the Vic, and the Carey Center Nonprofit Summit. In addition to these events, now more than ever, we are focusing on professional development and learning opportunities. Carey Center nonprofit affiliates are the first to learn of upcoming program, and membership is free. Join at aub.ie/NPAAPE or APP. I'll go ahead and drop that in the chat later. And before we start, go ahead and mark your calendars for our last program of 2020, titled An Overview of the Form 990 with Jerry Gross, CPA of Warren Averett, next Wednesday, December 16th at 10 a.m. I'll drop registration details in the chat on that as well. And be sure that you are on our mailing list to receive information about these upcoming events. Now, let's go ahead and get to the reason you are all here. Please join me in welcoming today's speakers, John Boles and Robert Foster, CPAs and partners of Himmelwright, Huguley, and Boles. John is a graduate of Auburn University in accounting and a member of the American Institute of Certified Public Accountants and Alabama Society of Certified Public Accountants. He has served on numerous boards and committees, including the AICPA, ASCPA, EAMC Foundation, and the Auburn University School of Accountancy Advisory Board. John is also a local director of BBVA. John loves to travel and spend time with his wife, Janie, and 4 children, John Jr., Bella, James, and Jack. Robert graduated from Auburn University in accounting and is a member of the American Institute of Certified Public Accountants and Alabama Society of Certified Public Accountants. The go-to guy for answers, he plays a vital role in training and mentoring staff. Robert is married to his high school sweetheart and has 3 sons and 2 grandsons. Please help me welcome John Boles and Robert Foster.
Thanks, Brittany, for having us, and thanks to the Carey Center for having us. Today, we're going to be talking about what is an audit. And just to give you a little bit of more history about me, I started working in this profession in auditing nonprofit organizations in 1997. And one of the very first engagements I was assigned to was the Salvation Army. And so I have been working with nonprofits since then, doing audits, doing reviews, compilations, consulting. We've worked with big ones and we've worked with little ones. Robert's very involved with helping nonprofits get started, completing the 1023 form that's necessary. But we do everything from audits to consulting and tax work for the nonprofit organization. So we appreciate you guys having us. And so let's start by talking about what is an audit. Let's see, Robert's gonna.
I'm the old guy, so I'm the tech guy. Y'all just believe that.
So,
right.
So this is a little graph here that I thought we'd start with. And it's a pyramid, and at the very top, you've got audit services. And then you've got review services, compilation services, and agreed upon procedure services. So typically, I get calls from nonprofit organizations and they say, I need an audit. And they may need an audit, but they might need something else. But everyone seems to refer to anything a CPA gives a nonprofit organization as an audit. But audits, you may or may not need an audit. There are different levels of assurance services, different levels of accounting services that may or may not meet your needs. So as a nonprofit organization, you need to understand exactly what you need. And we'll talk about each of these procedures there as we go. And please, if you have questions, I want to make sure that we answer your questions. So if you have something specific, please, I think Brittany said that you can email or type into the chat box, or I don't mind you if you want to ask the question, you could unmute and ask the question. That's fine with me, but I want to make sure we hit everything that you may have today. So if you look at the template, the very top is the audit services. And I would compare an audit service to a colonoscopy and an MRI at the same time. Okay, that's sort of what an audit is like. And it is the highest level of assurance services that we can provide. It's intense. We look at everything inside and out. We're required to be independent from you to do an audit. The next one, and we're going to talk in detail about each of these, but I want to kind of just introduce these items to you to start with. The next item you see up there is a review. A review is also considered an assurance service. We provide some assurance. The auditor or the reviewer, the CPA, provides some level of assurance of the financial statements. But a review where the audit is like a colonoscopy and a MRI all at the same time, a review is more like getting a big life insurance policy. So the lady comes out, or the man, whoever, and they sit down with you and they ask you a ton of questions. Have you ever done this? Have you ever had that? They weigh you, they take your blood. That's sort of like a review. A review is a step down from an audit, but it's still going to require a lot of your involvement, and you're going to answer lots of questions. So, and then the next item on the pyramid there is the compilation. A compilation is like going to a doctor visit, like your annual update with the doctor. You get weighed, they take your blood, they check your heartbeat. That's sort of the compilation services. And really the difference in a compilation and an audit and a review is the CPA doesn't provide any assurance, but you do get a financial statement. You get a nice, pretty financial statement prepared by the CPA, but we don't give an opinion saying that the numbers are accurate. The next item, which is probably the least talked about, but I think very important for nonprofits to know about, it's considered an agreed upon procedure report. That is like going to the doctor and getting a very specific test done, like going to the doctor and getting your cholesterol checked, or going to the doctor and having a stress test. If you have a specific issue and you want the accountant to look at it for your organization, this may be what you need. You may need an agreed upon procedure report. And we're going to talk about that at the very end, but I kind of want to just start out with this pyramid to give you an overview of all those different services. So let's move on. Robert, can you tab over to the next slide, please? So what is an audit? An audit, and we're talking specifically about a financial statement audit. We're not talking about an IRS audit or you hear the word audit a lot. We're talking specifically today about financial statement audits. It's an examination of an organization's financial statements and their notes that go along with the financial statements. It's performed by an independent auditor. An audit provides reasonable assurance that the financial statements are materially correct within the applicable framework, typically GAAP, generally accepted accounting principles. You could also use cash basis. We're currently working on a cash basis review. So you don't always have to follow GAAP, but real quickly, a couple things I want to point out here. And again, that audit is like the colonoscopy or the with an MRI. It's intense. We look at everything. We're examining all your records basically, but the auditor has to be independent. That means that the auditor can't be related to anyone that works at the organization within the accounting function, or the financial reporting function. The auditor can't be on the board. He's got to be independent of the board. So you want a complete, unbiased, objective professional doing this work and giving you their opinion. But an audit only provides reasonable assurance that the financial statements are materially correct. So auditors don't provide 100% assurance. We do not come in and say everything is 100% accurate. We provide what we call reasonable assurance. And what that means is if a educated donor were to pick up the financial statements and read the financial statements, their opinion of the financial statements would not be swayed by an error that we would accept. So that's considered materiality. We aren't auditing to 100% correctness. We want it to be correct within an immaterial amount. So one of the things we do at the very beginning of the audit is we calculate materiality. What is considered material for each organization we're auditing? Again, I talked about the different frameworks. You could have GAAP is the most common. You could have cash basis. You could use another basis. If your organization wants to have an audit of the budget, you could present it using the budgetary basis perhaps, but different bases can be used. So what's the purpose of a financial statement audit? A financial statement audit adds credibility to the organization's financial statements. You are getting some level of assurance that those financial statements are correct materially in accordance with GAAP or whatever standard you're using. So what all is involved with an audit? The first part of the audit is the planning phase. And in the first year you go through this with an auditor, this is really important. I can't really conduct an audit until I understand the entity. And so this phase of the audit, the auditor is going to come in and ask all kinds of questions that the auditor is going to be trying to understand what your entity does, what is its mission, how does it operate, who opens the mail, where does the mail go, who takes the deposits to the bank, who records donor receivables. There are lots and lots of questions during this part of the audit, but it's really, really important, particularly the very first year as the auditor's getting to know your organization. This is extremely important. I couldn't do a good audit without this part of the audit. I have to understand the organization, and every organization is different. So this is a big part of the audit. During this phase of the audit, you're going to also co-develop expectations with the auditor and the organization. So you're going to sign the engagement letter. You're going to agree on the price, the fee. You need to understand that up front. You need to understand the timing. The auditor should provide you with a client assistance listing. That's going to be key to a successful audit. Is the auditor tells you what they're going to need, and you have that information ready when the auditor's ready to come in and start field work, and it's going to make the audit go much, much better. During this part of the audit, you also, the auditor will do the materiality calculations as well. And I'm different than a lot of auditors. I don't mind sharing materiality with my clients because I want them to understand what I consider material. A lot of auditors kind of keep that secretive, but there's really no reason to do that. I'm not going to have an audit client that I don't trust. That doesn't mean I'm not going to verify, but I do trust them enough to share that with them. The next phase of the audit is the field work. So this is where the auditor's actually going in and doing testing. The first part of the field work is the substantive testing. The auditor will look at your bank reconciliations. The auditor will look at checks to verify payments were made for certain assets. The auditor will look at invoices, purchase orders, and make big sample selections of transactions. That's what we call substantive testing. The auditor, the next part is also inquiry and confirmation procedures. So there's a lot of questions in an audit. When you are audited, you're gonna be asked lots and lots and lots of questions. The auditor will also send confirmations. So what that is we'll send a letter to a bank and say, hey, please share with us this organization's bank balance as of the end of the year. We'll send confirmation letters to pledges, those donors that have made large pledges to the organization. We confirm that they have actually indeed made that pledge and that it should be recorded as revenue and receivables at the end of the year. We can confirm investments. We can confirm debt, CDs. We also do analytic testing. And that's where we look at tons and tons of ratios. And over the years, that has really become a really important part of what we do is you can look at things analytically and identify a lot of issues. And we find lots of errors actually through that analytic testing that we do. And another thing that I don't have on the slide is internal controls. Larger organizations, the auditor can actually go in and test internal controls. And when they test the internal controls, this has to be a large organization with a lot of people and a lot of different accounting departments. If the auditor can get comfortable with internal controls, they can then reduce the amount of substantive testing required in field work. I don't have any audit that I test internal controls on that's not a single audit, a grand audit. And we'll talk about that in a minute. And so the next part of the audit is the wrap-up phase. This is where you actually get an annual report. You get internal control issues in writing from the auditor, recommendations from the auditor. One thing I would like to tell you here, a good audit firm is going to be communicating with you all throughout this process. If they identify an issue or potential issue, what we like to do is let's say the issue is in accounts payable. We will first go to the accounts payable clerk and make sure we understand that this is indeed an issue. And then we have an agreement that there's an issue, because so many times we may think that there's an issue, but we don't know your organization as well as you do. We don't know your organization as well as any of your employees. So we go to your employees and we say, is this an issue? Are we understanding this correctly? And we're on the same page with that particular person. And then we go up the ladder from there. So from there, we would go to the department head or the executive director, and we just get on the same page. We don't want to be in a board meeting at the end of the audit presenting an audit report with a surprise issue. No one likes that. We don't like that, and organizations certainly don't like that. It makes the board alarmed. So good audit firms communicate all those things throughout the course of the audit. But at the end of the audit, you're going to get an audit report. I've got one here. That's what it looks like. It's a book, financial information. It's got an opinion in it. You're also going to get a letter with our internal control issues that we identify and any recommendations. How much do audits typically cost? It really depends. So it is really hard to give you an audit fee without seeing your trial balance and the complexity of the organization. It's hard to do any audit. Even a small organization is hard to do an audit for less than $10,000. Most audit firms are going to charge around $100 an hour. That's 100 hours. So it's going to take at least 100 hours of work to do the planning, to do the field work, and to issue the audit report and all the things associated with it and comply with all the auditing rules. So I would say if you can find an audit firm to do it less than $10,000, they're probably either not following the rules or they're giving you a discount. That's a pretty good fee. And the fees go up from there. You know, I think our largest audit fee is probably around in the $40,000 range for a nonprofit organization. But back when I was with a large firm, audit fees get really high. They get up into six figures pretty quickly. But most of the local firms that we deal with, most of the local nonprofit organizations around here, I would say a general fee is in that $10,000 to $15,000 range. How long do they typically take? It depends again. I would tell you anywhere from 1 month to 60 days is pretty typical. It's going to be really, really important in being efficient and getting the audit done to have that client assistance listing that I talked about early. You need to understand what's going to be required. You need to provide it to the auditor. The auditor needs it on time and it needs to be accurate. And if you can do that for the auditor, it's going to make your life easier. It's going to help them get done a lot quicker. And really everyone wants the financial statements by the board meeting. Most nonprofits need it by the board meeting, or there could be a grant work requirement, but get that client assistance listing, understand what you need to provide, and it'll make that process a lot smoother and you get done quicker. So what is required of my organization during an audit? A lot, okay? We've kind of talked about it. I'll tell you a little story. I was auditing a firm not far from here. I was a young guy and a staff accountant, and I had to go down into the accounts payable department, and there was a lady I needed an invoice from, and it was about 8:30 in the morning. I asked for the invoice, didn't have it. Around lunchtime, I had to come back down to the same department for another reason, and I see the same lady, and she says, "I still don't have it." Okay. At the end of the day, before I go home, it's a Friday afternoon, I come back by and she says, "Still don't have it." Okay, well, I'll be back Monday. Well, I was leaving with my family to go to Lake Martin. I don't know if you guys have ever been to Lake Martin, but we were going to have to take the boat late Friday afternoon from one side of the lake to the other. I thought I knew where I was going, but it was really dark and I got completely lost. And this is before there were cell phones and things like that, but it is really dark. I was trying to go like toward Windermere, and I ended up in Stillwaters, and I was so lost. I didn't have a cell phone or anything back in these days. I said, you know what? I'm just going to pick a house and I'm just going to just bite the bullet and go knock on the door and ask them, "Where the heck am I? Please help." So I go knock on this door, and who answers the door? That lady I'd been asking the invoice from all day. And she said, "You are the most persistent auditor I've ever seen." So hopefully it won't be that bad. Her husband did help me find where I was, and I made it eventually. But that's just kind of the story. You may feel that way during an audit. You may feel like we are pestering you and we're asking for things over and over again. But what is going to be required of you during the audit is you're going to be given that client assistance listing. And you're going to be asked to provide lots of documents, bank statements, support for fixed assets, a fixed asset schedule, debt schedules, lease agreements. You're going to be asked lots and lots and lots of questions, particularly the very first year. We're going to have to understand your processes, and even, from where the mail comes in the door to who's signing checks to how you do your budget. So it's a pretty intense process.
And I want to throw in that lady still didn't give him his invoice until Monday. She made him wait. He didn't get it.
That's right. So why would you want an audit? Really, an audit gives you credibility. An audit sometimes is necessary to comply with a grant. Sometimes a board will require an audit. Grants often require audits. If you are an agency of the state of Alabama, they may require an audit. Typically, an audit is required. A bank may need an audit, or there's some reason that you need to provide your board or donors with credibility that you know what you're doing in terms of preparing financial statements and having accurate financial statements. Are audits designed to detect fraud? No. This is a big misconception. Don't hire an auditor expecting them to come in and find fraud. If you think you've got fraud going on, you need a forensic audit, not a financial statement audit, or you could perhaps need an agreed upon procedure. We can talk about that in a minute, but audits are not designed to detect fraud. So the next slide shows the audit opinion, and they're different. Well, actually, it's the different types of opinions. We've got unqualified opinion. That's really the best opinion. The auditor is saying that they didn't find any material issues and the financial statements are accurate within a material amount. They're giving that reasonable assurance. A qualified opinion, that can be there may be one issue and the auditor is basically saying that these financial statements are correct except for this one issue, and the auditor will then provide the explanation for why they're qualifying the opinion. It's not the end of the world to get a qualified opinion. Sometimes we do it on purpose. The next type of opinion is an adverse opinion, and you don't want to get an adverse opinion. I don't think we've ever issued an adverse opinion. Typically, if it's that bad, we just resign and everyone goes away and we don't speak of it anymore. The last type of opinion is a disclaimer of an opinion. And when an auditor disclaims an opinion, they're saying, look, we don't know. We just can't figure it out. And we're not able to get enough information to provide that opinion. So we're going to disclaim the opinion. I don't know if any of you ever have a 401k audit. If you have a large 401k plan, oftentimes in 401k plans, and we do 401k plan audits for nonprofits, we disclaim an opinion on investments because the investments are really being taken care of by a third-party administrator. So it's not the end of the world to have a disclaimer of an opinion. That's sometimes necessary and appropriate. So let's talk about the different types of audits. There's a financial statement audit, and that's what you typically see, where the auditor's given assurance on the financial statements alone. The next type of audit you may have heard is a yellow book audit. This is sort of a compliance audit. It's often required by the state, will require a compliance audit. And what happens is the auditor gives the assurance on the financial statements, but in addition to the financial statements, the auditor will then do testing over compliance with rules, regulations, and laws, and they will report on the compliance with those issues. Typically, there's a grant involved that is requiring this, or a state government or some government agency is typically requiring that. And then you have the single audit. Now, a lot of you are going to be required to have an audit if you receive over $750,000 in federal money. They require single audits, and this is the most intense audit. You're going to get the financial statements and all the work over the financial statements. You're going to have the yellow book work over the compliance, but then there's going to be some intense testing of the federal money. And what typically happens is you pick a grant, a large grant, and the auditor will understand controls, test controls, and report on the controls over that particular grant. I talked about the Yellow Book audit just a minute ago, but basically, and you may hear of a government auditing standards audit. That's Yellow Book. It's a compliance audit over rules and regulations. But we actually give an opinion on the compliance in that report. So and then you can go to the next slide there, and this is the single audit. And as I said, the requirement $750,000 in federal money. You need to track your federal money very, very carefully, and don't get confused. Sometimes you think you're getting money from the state of Alabama, but if the money originates with the federal government, it's going to count. And the best thing to do is with grants, with CFDA numbers, they're federal grants, and you need to include them in that calculation. The Office of Management and Budget oversees single audits. The results of a single audit are actually made public. So if you get federal money, be very careful. Make sure you know what you're doing, because if you have bad results, they're going to get reported. You can lose grants, you can lose donors. So if you are getting federal money, you may want to call a CPA firm just to get a consultation to make sure you understand how to comply. I put a copy of the audit report there just for you to see, but I'll point out that we're doing a financial statement audit, and we make the point that the financial statements belong to the organization. So these financial statements are not mine, they belong to the organization. The only thing that belongs to the auditor is my opinion. There's one page in here that's mine. Everything else is yours. The audit provides reasonable assurance regarding material misstatements. So just keep that in mind. That very last paragraph, that third paragraph, is our actual opinion. So that's just for your reference. So next, and I'll be a lot quicker here, and I'll turn it over to Robert for a minute, but the review is the other type of audit. It's not our assurance service. It's not an audit at all. A review is, again, it's like that intense life insurance test where you're getting a life insurance policy and they come in and ask you all kinds of questions. They weigh you, they take your blood. That's similar to a review. With a review, you'll provide a trial balance. And primarily what we do is we do analytic procedures. We look at ratios, we ask lots of questions, and we provide a financial statement. We give limited assurance on those financial statements, less assurance than an audit would give. So what's involved with a review? Primarily inquiry and ratio analysis and financial reporting. How long do reviews typically take? They're a lot less than an audit. Okay, so if an audit takes 60 days or so, a review may take several weeks or 30 days. Because of that, the reviews are typically less expensive. So if you have the choice of getting a review or an audit, I would choose a review because it's less expensive. It doesn't take as long, and it's just less invasive. But there are lots of questions that will be asked. So what would be required of you during a review? Back to my story about the nice lady that I met at Lake Martin, there's not going to be any of that going on, really. We don't ask for invoices. We ask lots of questions about why did this change and why did this ratio change. Look at key ratios for your particular industry. And we do the financial statements just like we would in an audit. Why would you want to review? Because it's required primarily. If the state requires you to do a review or a grant, you would want to do a review is cheaper than an audit. So if you have that choice, again, I would probably go with the review if you're okay with that less level of assurance. Are reviews designed to detect fraud? No, they're not. So I kind of want to repeat that because I think that there's a connotation out there that audits and reviews detect fraud. They don't. I've got there, similar to what I showed a moment ago with the opinion for the audit, I've got the opinion for the review, and it provides less assurance than the audit. But that's just for your review there. Robert, you want to talk about compilations?
Yeah, let's jump into compilations. Compilations, we don't see as many as we used to. We still do them. The AICPA back in 2014 tried to get compilations no longer in our codification, but it was so wrapped up with the state societies that they couldn't do it. So we still do them. We don't do as many as we used to, but they're still there, and people still have them. Basically, this is a non-assurance engagement. That means you don't get any sort of opinion. You still do get a compilation report, but on the report, there is no assurance, there is no opinion, and basically the CPA firm is compiling the information from the trial balance that you give them. And it's a whole lot less invasive than either the audit or review. What is involved with a compilation? Well, obviously, we're presenting information obtained from the client in the financial statement format. Once again, we can present it in different formats. It could be cash, it could be accrual, it could be what we call Aup Boles. We do those for income tax basis, but this is certainly the cheapest and less invasive. And then obviously, it's going to take the least amount of time. Typically compilations, we're pretty good. If we've got good records from you, we can turn them around pretty quickly, probably less than 2 or 3 days. Obviously the cost is going to be much less because we are not giving you an opinion. We're just preparing the financial statements from the information that you have given us. Still on compilations though, one thing that we have to do, we still have to remain independent. We cannot do the compilation if we're doing other bookkeeping services and that sort of thing for the organization. So we have to be careful what we do and what we don't do if we're going to continue to give a compilation.
You have to report it if you're.
Yes, if we're not.
Right.
Yes, okay. Is still in the test engagement, which means we're an advocate for the client, but we are not giving any sort of opinion on our report. One thing I will talk about on the compilations too, what will be required. Generally, like I said, clients will send us a QuickBook, so they'll send us a trial balance. So you're not very involved. We will look at accounts just for your benefit to see if anything looks out to us and let you know, but we don't make journal entries or anything else. We just compile it from the information that you give us. And why would you want a compilation? Still, some banks, some lenders, if you have good relationships with you, they're comfortable enough to let you get a compiled financial statement, and they know it doesn't cost much money, especially since you are a nonprofit. They realize that the money can be used for better purposes than paying for an engagement that costs more money. And typically what we require, like I said, you'll just give us the support. Normally once we get it, we don't bother you anymore. Compilations are most often used just to get you a financial statement that looks nice. It's we give you our letter on our letterhead, and then you present it to the third party that's requesting it. And the old same question, are compilations designed to detect fraud? No, they are not. And this is an example of a compilation report. I I highlighted some things on my copy. In the first sentence, it says we have compiled, and that means we've just put it together. And if you drop down to the third sentence, it says have not audited or reviewed, and do not express an opinion or provide any assurance. And then in the bottom paragraph, it says without undertaking to obtain or provide any assurance that there are no material modifications that should be made to the financial statements. So basically, we're saying nothing. We're saying that you're responsible. We didn't do anything other than put these into the prescribed format that you wanted us to put them in. Now, I will say, on our pyramid, we left off, there is a new leg on the pyramid. We can do preparation engagements now. We do a lot of preparation engagements for our profit entities, and you don't get any sort of report. We just say on there that there is no assurance on these financial statements, and then we tell you what reporting framework we are under. And those are certainly much cheaper even than a compilation. And once again, depending on the bank or the lender or your donor, if it works, then certainly that might be something you want to explore.
We have a question that just came in. One we're going to save for the end because I think it may be better for the end, but I think this one's good for now. You mentioned earlier that if there is an issue, you would resign from the client. So what happens if you were to uncover an illegal issue going on? Are you required to report it to the IRS or other reporting agency?
We are not required to report illegal activity to any type of law enforcement. We're similar to attorneys. We've got this agreement, we've got to be confidential. Now, if we identify something illegal or fraudulent, just like I told you earlier, we start with where we find the issue and we work our way all the way up. And we would be required to tell the executive director and the audit committee or the board about that finding. And then it would be the responsibility of the organization to take it further. If that organization didn't have a problem with the issue, we would definitely immediately resign.
Okay, thank you.
Can I ask a quick question?
Yes.
So are you technically then a fiduciary, or like, is an accountant and a fiduciary?
I would say we're independent. So I don't think we're a fiduciary because we've got to be completely objective and independent. But we do have that, we are to be confidential. We can't share information we find during the audit review with any third party. That would be against our code of conduct. So I'd say we are not a fiduciary. So agreed upon procedures. And again, I go back to that first pyramid, and this was on the very bottom, and not many people know about these, but this is like hunting with a rifle, okay? If your organization has a specific need or question, we can do an agreed upon procedure engagement. An example of this, earlier this year, we have a little nonprofit school, and they have to comply with the accreditation. And so they ask us to come in and do an agreed upon procedure report to make sure that they would comply with the accreditation rules. And some nonprofits may want to know that all checks have been signed by the appropriate designated signer. We can do an engagement where we just look at the checks and look for that signature, and then we would report on our findings. So these are, again, going back to the medical examples, this is like a very specific test, like a cholesterol test or a stress test, where you're going into the doctor for a very specific reason. I think these are really effective. what's involved with an AUP engagement. It just depends on what the client needs. If you have any need that you think an independent auditor can give you some assurance on, if it's testing deposits, getting to the bank, whatever it is, if you think there may be fraud, this is an engagement that you can do that might have some kind of report on fraud. So this is a really flexible engagement that can be performed by CPAs. How long do they take? It depends, but typically it can be done in a week or so, a week or less, really. How much do they cost? A lot less than an audit, and typically a lot less than a review as well. So one thing I kind of want you guys to think about is if instead of getting an audit, you could do an agreed upon procedure report over certain things that your board may have questions about. The CPA can come in and look at those specific items, and then you could get a compilation. So that you'd have a nice financial statement to present, and then you're getting some assurance on those issues that you're really worried about. You could do that in less time and less money than an audit would take a lot of time. So that's just something I want you guys to be aware of, to consider. What would be required of my organization. It's going to be very specific to the tailored engagement, and typically it's going to be a lot less invasive than an audit, but you will, depending on what the auditor's doing, they will come in and have look at your invoices and bank statements and things like that. So why would my organization want an engagement like this? Is efficient, is specific to certain questions, and is cheaper. Are AUP engagements designed to detect fraud? They can be. They can be. So, and then I've got an example there of what the report looks like, but you can look at that. I think we're kind of coming up short on time, so I wanted to make sure we answer any questions you have about this subject. And Robert Foster here, he is really our go-to guy on all types of research and questions. If you have a sales tax question, a 990 question, and I'd hate for you to go away and not ask, because Robert probably can help you.
So we do have a question from earlier that I saved until the end. Sid asked, for the situation of a community foundation, for example, where there are funds set up by donors, are the donor advised funds included in an audit and review, etc.?
So this would be where an organization gives money to the community foundation, and I guess the community foundation's holding those funds. Yes, absolutely, those funds would be a part of the audit. They would need to be audited.
Okay, so here, can I dig deeper into the question a little bit?
Sure.
All right, let's say there's a donor advised fund within the community foundation. And that donor advised fund says, okay, these, the income off this fund is supposed to go, I would like for it to go to churches, schools, and that's it. Churches and schools. And let's say that, a generation or two down the line, they say, well, no, we want it to go to ABC nonprofit, not a church or a school. Will that be, will you catch that in an audit?
What we will test for that, and we should catch it if it's material. Most definitely, that would be a part of the audit. We've had a client that was given a large amount of money by a donor, and the money was to be used for a very specific reason. It was not. We report that, and we actually put it in the audit and say the organization did not use the money in accordance with the donor's intent. So that is a really big part of auditing nonprofit organizations, is to make sure that any restrictions placed on a gift or donation is followed. So the donor intent is huge. We actually report on if a gift is restricted or not restricted, and that's really clear in the report. So that would definitely be something we look at.
Okay, so do you tell the donor that? Or is that on the back of the nonprofit, or, you know, is that sort of the obligation of the nonprofit to say, oops?
Right. We recommend that the organization goes to that donor and makes it right. That's our recommendation. We're not required to go to the donor and tell the donor, hey, this organization you gave money to isn't using it according to your restriction or your intent. That would be a breach of our confidentiality with the client. So
And I would add too, that your donor is probably gonna want a copy of the financials. So I wouldn't want to give them that, and then they find out in the financials that, oh, we didn't use the money like we were supposed to. So I get that, and having that in there too, if I'm a potential donor, I might not want to give money if you're not following the intentions of a donor that's already given you money.
So what advice would you give a donor in that situation? I mean, you kind of said what you'd say to the nonprofit. Hey, this is, you know, flag. What would you say? What advice would you give to a donor in that situation?
I think it would be appropriate for the donor to request the organization to provide you with how the money was spent. They should be able to report to you how that money was spent. You can also pull the 990s off the Guide Star, and you may be able to identify from there. You can request a copy of the audit. So there are a number of things you could do as a donor. Look at the 990, request an audit, request specific reports. But if you're in that situation, you're a donor and you have that question, you should definitely find out the answer. We take that very seriously, though. It's a very important part of what we do with nonprofit audits.
We have a bookkeeping question come in. Can bookkeepers do monthly audits based on their qualifications?
An audit has to be performed by a CPA.
Yeah.
And an audit has to be performed by an independent party. So I would tell you that a bookkeeper that's not a CPA couldn't do that work. A bookkeeper also couldn't audit their own work. So they wouldn't be independent. So I would say no.
Yes.
Perfect. And what is the best advice or best practices that nonprofits can adhere to daily and monthly that would render a good or easy or efficient audit?
Having a strong financial statement closeout process would be really important. Making sure that at the end of the month, your bank statements are reconciled. Produce a financial statement on a monthly basis. Compare the results to a budget. Have the board involved with the budget. Be able to explain any significant variances on the budget. That is, to me, one of the most important things a small nonprofit organization can do is work with the board to develop a budget, close out monthly, provide monthly financial statements, and compare how you're actually doing to the budget.
Hey,
And
do you have that tip sheet? That was really good what you rattled off there.
I could put one together for you.
Yeah, that was really good. I mean, it's very basic, and you would think everybody would be doing that. Maybe they are, maybe they aren't, but I like seeing that kind of a menu of, here's what you got to do every month. Here are your SOPs for the month. Boom, 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 boom. That was really good.
Well, it gives the auditor too, it gives us a higher level of what we can look at on your financials, because you are doing it monthly, you are reporting to the board. Because typically when we do a small audit like we do, separation of duties usually are not what we like, but when we see that you've got the board involved and they're looking at financials and reviewing budgets, then it gives us a higher level of confidence. And therefore, we typically don't have to dig in as deeply as we might.
And I have a question, and y'all probably covered this in words that I don't understand because I don't do what you do. So I have nonprofits, especially smaller ones, that are looking to apply for their first grants, and they come to me, and I know enough from Rick to say, well, you should definitely have your financials in order and some kind of auditing service. That's all I know. And I know that audits and compilations can be used when applying for a grant to show that. But I mean, can you use the agreed upon procedures? Can you use something like that? Like if there's something specific that the grant asks for or anything else? Or do you usually see one or the other for grant applications?
It's gonna depend on each grant and how much money. Some grants are gonna require an audit. I would, again, go back to what we just talked about a minute ago, have that closeout process so that the organization can provide a monthly financial statement. And at the very least, being able to provide a financial statement in that process will help. I'm not sure that an agreed upon procedure would necessarily help in the grant application process because typically grants want to see the whole organization. So I think a compilation at the very least, but again, each grant's going to be specific.
Perfect. That answered that question. Thank you so much. Does anyone else, before we wrap up today, does anyone else have any questions? It could be on what we learned today, or it can be on 990s or sales tax or bookkeeping. Anyone want to chime in or write something in the chat? I have to admit that I grew fearful of auditors when I worked at the bank. And it's not that I did anything wrong. I was just so scared that I had done something wrong or someone would find it. So this is I found this very helpful to people who probably felt like I did, to see that you're really there to help and get things together so that everything can run efficiently. So thank you. Thank you so much. And I will stop your screen sharing. And we are so grateful to John Boles and Robert Foster for joining us today and teaching us a little bit more about auditing services and the differences between everything. And we hope that you all can join us next week on the 16th at the same time as we learn a little bit more about 990s. So if you're here, that's probably something you'd want to join as well. So again, thank you so much for joining us, and everyone have a great day.